Hello, everybody. Kirk Spano, and it's a little chilly in Wisconsin today. Only 53 degrees when I woke up this morning. Made me very sad when I walked outside with the dog in a t-shirt. All right, where are we? Well, I'm doing two things today, and I have actually been actively making trades. The first one is that I have been rounding up my microcap positions into the Russell 2000 inclusion. So I want to show you that spreadsheet of what's going on. These are all the Russell inclusions. The Russell 3000 is the Russell 1000 plus the Russell 2000, hence 3000. The 2000 editions are generally stocks that were on their microcap list, but sometimes not. Sometimes they're IPOs, but they get added to the Russell 2000, and then they have pretty significant buying pressure from IWM, the small cap index fund. So Ametis is getting added. They are on my list. American Superconductor is getting added. They've been rallying pretty good. Applied Optoelectronics is getting added. Lots of stocks getting added. Quick Logic Corp is getting added. And then Spire Global is getting added. The one stock that I bought today that's a microcap that is not on the list yet, and it could get in at the wire, is Radcom, which is like right at the correct market cap for getting in. I'm not really sure how they do their banding for including and not including. I think because it was a smaller stock that is growing in price, it is less likely to get in than a bigger stock that shrunk a little bit in price. So if you compare Ametis and Radcom, they're about the same market cap right now, but Ametis was much higher a month ago, or 2 months ago, and Radcom was lower. So I think it has to do with kind of where they are and what Russell considers to be their range. So Ametis, I think Russell is looking at as at the bottom of their range, so therefore they get in. But Radcom is probably closer to the top of their range, so they don't. I think that Radcom probably has to rally here in the next 2 weeks to get in, so we'll see. I did buy a little bit today. I just didn't buy much. Cantor Fitzgerald and a couple other, I have a couple spreadsheets like this, show you how many shares to expect to be bought on the Russell inclusion. So with Ametis, it's right around 5 million shares, about 4 million from Russell 2000, and then the Russell 2000 value index. So there's different segments. A total of almost right about 5 million shares are going to get bought at the end of the month. And here's some interesting stuff, is that Ametis has about 5 million shares, actually 5.5 million shares that are short, which is about 13% of the float. At average volume, it would take a month to cover the shares. Now, we know that volume would go up and that the shares being bought by Russell are going to be all over the course of about a week. So I would expect a short covering rally to last about 3 weeks. Maybe 2, maybe 4, but about 3 weeks seems about right. And this is rated as one of the top stocks likely to have a short squeeze, just like it was last year. So I am expecting the share price to rise in the short term. That should give us a chance to close any call positions that are shorter term in nature. But I do expect an announcement from the company on a couple of different funding issues. And I think that the India IPO is announced in the second half of the year, possibly the first half of next year. We'll see. But that India IPO, given the strength of the India market, looks to be sooner than later. So we had hoped it would be in the first half of this year. I always kind of thought it'd be in the second half. Could push all the way to next year. But regardless, there's a lot of money coming Ametis's way. Eventually, the LCFS credits in California will finally get upgraded. That's been bumped to October, November or something. It's just ridiculous how slow the California bureaucracy moves. But I think that they have to navigate a lot of lawsuits. So that is really, the problem with California is everything is litigated and voted on, and it's like they need a dictator or something, just get things done. All right, so I am adding all of these stocks. I bought some Quick Logic today. There's not much of an option market, so just buy the shares. I actually did round up Spire Global in just a couple accounts that weren't at a full position. So I have a full position in Spire Global. I have a 1% position in Quick Logic and in American Semiconductor and Applied Optoelectronics as well. 1% positions. Quick Logic in some accounts is a 0.5%. So, 0.5%, 1%. Metis is over 8%, Inspires at about 4%. Over the week, and I'll be publishing this article today and just talking about some of the numbers and why you should be buying. Over the weekend, I put out the top energy stocks I'm buying right now. I had some orders for Katera in, and they did not get executed just yet, so I'm waiting for a little dip. I'm going to try to buy those under 28 if I can. My top oil growth stock is Permian Resources. I think that it's a no-brainer. I think that the nature of the Delaware Basin and the Permian, so the Delaware and the Midland are two big basins in the Permian or plays in the Permian. And Permian Resources is really strong in the Delaware. Katera is super interesting to me. They also have a Delaware play, but then the rest of their assets are in the Marcellus natural gas shale. I think that it is very likely that Katera sells their Permian oil acreage and becomes a pure play on the Marcellus for natural gas up in Pennsylvania. When they sell their Delaware assets, and this isn't speculation, this is going to happen. I just don't know how fast or to whom. The reason why it's going to happen is because the laterals, the pipes that go horizontal underground, which started at 400 yards and then then a half a mile, then a mile, and then 2 miles in the last couple of years. Those laterals are reaching 3 to 4 miles now. That's what they're building right now. So you have to have a lot of contiguous acreage. The rationalization, which is the term that the Matador CEO Joe Foran used at the conference, means that you're going to see a lot of asset swaps so that companies, instead of being scattered all around, and these mergers and acquisitions have already been happening in the past couple of years, but they are creating bigger blocks of acreage. So you won't necessarily have, a company like Katera with a little land here, a little land there, a little land there. They're just going to sell it to somebody else whose land overlaps and is adjacent so that you can have more contiguous acreage. There is no way that Katera goes out and buys land. Zero. They don't have the scale to go out and buy a, Devon Energy or Permian Resources. Permian Resources, one of the guys who runs the company is a financial guy. I think that they're going to make one more purchase and then they're going to sell to either Occidental or Diamondback would be my guess. There will be Justice Department issues involved, so we will see, because the Justice Department has really been, given these companies a talking to when they do the merger on the idea that they're creating an oligopoly. The reality is that we know that Permian oil is getting towards the plateau phase, so the growth will be gone sometime this decade. And then the trick is going to be to hold that production as level as possible, as long as possible. And you can only do that with the longer laterals, which means you have to put the acreages together. So Permian is a big Delaware play. They are going to want to acquire before they sell, unless Diamondback comes in and just says, hey, we want to expand in the Delaware. Now, Diamondback, I didn't put on this list, but I guess they'd be the other one that you should consider. They're big in the Midland oil basin, part of the Permian is where they're focused, but they have really good acreage in the Delaware too. They're just not focusing on it yet. So either they add to it or they sell it off. So there's a possibility that Permian Resources starts accumulating acreage, buys something from Diamondback and buys something from Katera. We'll see who lands where, but either they end up getting sold or they just end up with even better acreage. So I like Permian Resources. I think it's probably worth 20 to 25 right now. Because oil prices are flattish, the oil companies have been getting beat up, but the odds of oil being cheaper after the election are pretty slim. Saudi Arabia is going to help Joe Biden get reelected in order to get their security deal because they're afraid that Trump won't give them one. But then after that, Biden's goals and the Saudi Arabians' goals of oil being a little bit more expensive without hurting the economy, that's going to be the long-term thing. So I want you to understand this. The people who understand that climate change is real and care about doing something about it include basically the Democrats, a handful of Republicans, but mainly the Democrats. But Saudi Arabia gets it too. Saudi Arabia is transitioning into alternative energy. They're going to develop lithium. They're looking to build battery plants. They're trying to get EV factories. That is part of their Vision 2030 plan. They are really trying to get off of oil by the middle of the century as their primary revenue stream. But they're going to use oil over the next 20 or so years to finance everything. Therefore, they want the price of oil to be more expensive. They want to make sure that there's still oil to fuel the economy prior to this big energy transition, which is 1/10 of the way through. We just got a batting practice. We're just starting the game. So Saudi Arabia and the climate change folks are aligned in wanting the price of oil to be a little bit more expensive, because with the price of oil a little bit more expensive, that accelerates the energy transition. This is important when I show you some of the other investments that I'm making. The safest oil stock and gas stock is probably Occidental Petroleum. We've talked about them 100 times. Berkshire Hathaway is going to end up with 50% ownership. That's what they're authorized. That's what their options and their purchasing are steering them towards. Their warrants, I should say, not their options. So they're going to end up owning 50%. That's going to be a whole lot of financial backing for Occidental. They're going to be one of the big players in carbon capture. It would be nice if we were actually capturing carbon. They are building one of the big suck carbon out of the sky things. I don't know how effective those are going to be, but being able to reduce the carbon footprint of our use of fossil fuels is a big deal, and it's tax incentivized. I don't think it's going to keep us using oil any longer, because we're running out of supply in the lower 48, and Saudi Arabia wants the price high. So Occidental is pretty safe here because of their huge Permian resources, and then a couple other assets, and the financial backing by Berkshire. You really can't ask for more financial strength behind something than what Berkshire provides. So every time the stock is around 60, you should be buying it or selling cash secured puts. I have orders to sell cash secured puts in. We'll see if they get executed. If the stock gets below the warrant conversion price that Berkshire has, which is like 58 something, then you can just buy it. So if Occidental is down to 58, you can just buy it. Let's see, where are they right this second? 60.31, so they're up $1. Katerra, they're going to end up being a very financially strong Marcellus natural gas play once they sell their Permian assets. My top LNG stock is New Fortress, because I think that their fast terminals, the ones that are at sea, are going to become very in demand. There's already demand, and they're just going to keep building those out. Understand what those are. That's, instead of building this giant natural gas and liquefied natural gas facility, they just build a ship and they float it out to where the gas is in the water. So this is becoming pretty important. They have a big project in Mexico that's going. They have another one that has been on again, off again. We'll see if it gets on again. They have Brazilian projects. There is a lot of international risk for this company, so I think of it as a position trading stock. I don't know if it'll ever be a forever stock. Maybe. They do have the ability to convert to hydrogen someday, but that's a long time off. So I'm just looking at it from the standpoint of, when do I want to buy it? Teresa and I sold it in here. I talked about that a number of times. Now we've got our correction, and it's getting into a buy zone. Now, there is a stronger buy zone down here. I think that it's going to catch here. We're close enough to summertime with all the heat and all the demand for electricity that's coming, between not only the heat, but AI data centers sucking up energy, that I think that you're going to see New Fortress Energy stabilize very soon and then rally. Now, does it get past 40? Does it break out past this area? get all the way up here? It might, but that would really be the target to get up towards 50. I think that 40-ish is the easy number, 50 is the hard number. So if you're like me, you probably start scaling out around 40, maybe a little short of that. But I do think this is something you can sell cash secured puts on right now. You are getting pretty good premiums. So I'm looking to sell the September $20 puts for $2. If suddenly the stock price does end up in this other zone, if it gets down to 15, 16, then I'll just buy shares too. Top alternative fuel stocks, we all know about Ametis. Talked about them already with the microcaps. Enphase, Solar Edge, Tesla, Generac, these are your energy management companies. Solar Edge has big financial problems right now, so I'm staying away from them. Tesla, I think, is overvalued. If they approve Elon Musk's compensation package later this week, and I don't know really how it looks because California and Norway are not going to vote for it. It would take retail investors to pass it. I really don't understand what anybody would be thinking to vote yes on that. I mean, that is a monumentally dilutive package. I mean, this guy would be making a couple $1 billion a year to manage that company. A couple billion. Nobody makes that kind of money. Nobody makes 100 million. They get a bonus once in their career of 100 million. And this guy wants a couple $1 billion a year. Get out of here. You know what? I'll take 100 other guys instead of him for that kind of money. You just don't need to pay this guy 15% of the company. That's what he's asking for. It's insane. So if they pass Tesla's compensation package for Musk, I'm going to short the shit out of that stock because it's going to crash. It's going to go all the way back down. It's going to triple bottom. And I will go on record right now and say that not only will it triple bottom, because you can see over the last 5 years, right, here and here, I will say that the stock breaks that 120 and gets under $100 if this compensation package passes. The company's not worth $500 billion right now. It's worth about what BMW is worth. And all you gotta do is pull up BMW and go, $62 billion, or Ford or GM. These are all companies that are going to have similar technology any day now, and they have partnerships on all the other stuff. The idea that somehow Musk's vision is much different than anybody else's is wrong. It's always been wrong. Maybe the first early days it wasn't, but it is now. And the idea that people are going to overspend on EVs at this point, completely debunked. Everybody's waiting for sticker prices to come down. Ford is on their way. Everybody's starting to buy hybrids because, well, I can double my mileage and, pay about the same price, because a Toyota hybrid or a Ford hybrid, only a couple $1,000s more than a gasoline car. And hey, I make my money back by the second year on the reduced fuel costs. So Tesla's just not worth, 7, 8, 9, 10 times all these other companies. It's insane to think they are. And if they dilute it by 15%, give or take, to pay Musk billions of dollars a year, whatever. At some point, the fanboys just get destroyed. Generac ran up on me. I should have bought it down by, when it was close to 100. And I got greedy, hoping to get it in the 90s or 80s. So the next time it dips, I want it. They're cross-selling with their generator clients is just so good. I will say they're not the only game in town. I know people around me in Wisconsin, we have Generac and Kohler here. And a lot of people buy Kohler. So I don't know who their partnership is with, and that's a private company. But Generac, one of the best plays among the public companies. And if I can buy it on the dip, I will. They really do manage their expenses well. And, their production, a lot of it's in Mexico or Wisconsin. And they just don't pay huge wages. They're good wages for here, but, it's not like paying somebody in California. So they're in pretty good shape. The best company, though, is Enphase. I don't think it's even questionable. And I think that you should probably be looking, and I mentioned them last week, you really should be looking at building a position at Enphase. They're the one must own in this group as far as I'm concerned. And then lithium, couple ways to do it. The clean energy ETFs, which we've talked about, have some of these positions. I want a little bit more focus on the lithium and battery tech, because it really has been beat up pretty bad, especially the lithium stocks, because the EV narrative has just, been horribly negative the last couple of years. So the whole 2 years versus 10 years thing, everybody focuses on, oh, it's going to happen super fast in the next 2 years. But I was telling you in 2020, it was to take 10 years for this adoption to take place, with the pivot being in 2026 or 27, which I think we can comfortably push to 27 plus. 27 to 30 might be a little smoother line on the adoption than a V shape. It might be more of a U shape than a V shape. But these companies are just dirt cheap. And Elb Marley just got some PR by another investment letter, a bigger one. And then Lithium Americas, nobody understands the company, but they have the Thacker Pass mine in Nevada. They just got most of the money they need to develop it from the Department of Energy, and some little company called GM gave them another $650 million in a 15-year deal to buy 100% of the lithium. There's nothing uncertain about this stock. At current prices of lithium, this is a break-even company, right? Between the capex and what the value of the lithium is worth, which is about $4 billion, and I have to change this to at current prices, the stock is basically, only undervalued a little. However, the price of lithium is going to go up, and you're going to see the cost plus contracts that they do generate another $3 to $5 billion of value. So the market cap on this should be in the 3 to 5 billion range in 4 or 5 years. So right now it's obviously much lower than that. The show right there, market cap 656 million. So it should be 3 to 5 billion by late this decade. So if you're really a growth investor and you like the certainty of government money and GM money, this one's pretty easy. You just got to be patient with it. So you don't trade it. You just let it grow to 3 billion. And then at about 3 billion, you think, okay, now what? And remember, this is a stock that I think has some meme ability to it. All these clean energy things, when those FOMO rallies come, really can spike up. So if you get that spike, obviously you can take a whole bunch of profits and turn it into a free position. But, I think that this is probably a really good basket. I want to own all three. Lit for the diversification, ALB because it's the big horse, it's the blue chip in the group, and then Lithium Americas because, I think it's a 5 to, I guess on the outside a 10 bagger, but I don't think it's going to be a 10 bagger, but I think a 5 bagger pretty easy. So anytime I know that I can at least triple my money in the next 5, 6, 7 years with the potential to make more, you just don't get a lot more certainty than this, right? The Department of Energy financed it for them along with, the rest of the money from GM. This is something that the government and the car companies, who are important, right? If nothing else, that's a special interest that's pretty special. They financed the whole thing for them and then agreed to buy everything at a markup. Pretty good deal. So, all right. Any questions? We can build some trades here. You could actually sell the 2250s if you want to be a little bit more aggressive, but I like to be in that pretty comfortably in that trading range for New Fortress. So if I can get, instead of a buck, I get $2, I'd be super happy. I might be willing to sell this one for $1. I have to think it through, but that's a little bit more aggressive. But you are making 5% on your money. 1 in the 20 is 5%, and that's for July, August, September. So about a little over 3 months. There's 4 3-month periods in a year, so you just kind of shorthand it. So that's a 20% rate of return, even at only $1. If you get $2, right, then it's 40%. But we'll see. I might. My guess is that I don't try to get to $2. I probably peter out, and if I can get $1.25, $1.50, something in there. I'll watch the charts and I'll decide. But you need to make up your own mind. Don't try to be too pretty perfect. If you're not a chartist, then you can't expect people like me and Teresa and Shooter say, oh, right now, this hour, buy it. We're telling you this is really close. Figure out what works for you, where you want to set your good till cancel order. And I'll let you know if I buy it. But, change the way that you are doing things. If you're waiting for the buy it right now, there's nobody out there that does that well. It just doesn't work that well. And services promise it, but they're bad promises. I can tell you that, hey, Here's your, think of it as a bullseye. We're inside the bullseye now, and it's up to you to decide how close you need to be to make your trade. So I will finish this up, and I've got 4 other articles that are like half done. So more of the Trump hysteria. So a couple of things to keep in mind. The laws that Trump passed through his reconciliation bills create budget law, that lasts for 10 years. The only way to pass a reconciliation bill is you have to have a majority in both houses. Okay, that's number one. The odds of that happening are slim, right? It's very unlikely that Trump would have the Senate, the House, and be the president. But even if he did, let's suppose that he had similar majorities as the Democrats have had in the Senate. Say he had 51. The odds of the Republicans getting 51 seats are being like everything would have to run well for them to get 51 seats. For them to maintain the House is looking almost impossible. But let's suppose that they had this 1 or 2 seat majority in the House as well, 3 seats, 4 seats, whatever. Now you have to start asking yourself the question, how many politicians have to be bought off to thwart a bill? And the answer is, in a very close Congress, almost none. Kristen Sinema and Joe Manchin were bought off by their respective special interests, and they couldn't pass hardly anything, right, that Biden really wanted with regard to changing anything that Trump had done. We still have the Trump tax cuts, don't we? Biden couldn't get the votes to get rid of it. The Republicans, one, won't have the votes to change anything in all likelihood. But even if they do theoretically have the votes, you only need 2 or 3 or 4 to not play ball. And we know that there's at least 10 in the House, probably 12. And the senators, I mean, they're like God. They're demigods. They don't have to listen to Trump. Now, once he's in, he's a lame duck. So think that through. The Republicans that win with him are now part of a lame duck administration. They're not going to go and undo a whole bunch of clean energy things because every single one of them knows that without an all of the above energy policy, we are totally screwed 5-10 years out. You can't undo this stuff. So to have this idea that I should be afraid of all the alternative energy credits and all that momentum from the trillions of dollars that's been spent and is planned to be spent is going to suddenly disappear. It is silly to focus on it because the odds of it happening are almost zero, and they would just come back in a couple of years anyway. Just doesn't matter. In the case of Ametis, what do you think is going to happen by year end, especially if Biden loses? They're just going to push all the money through. Here, we're not sure how this is going to work after we're gone. Here's the check. All right. Don't worry about this stuff. It is so unlikely that the laws can be changed, number one. And number two, got to remember, trillions of dollars is in play here. Trump is not going to tell all these companies to go fuck themselves, right? He's not going to do it. All Trump wants is his tax breaks and to push his brand. But I think a lot of it's a game. I do. I think a lot of it's a game to get elected, just to get the tax. That's what I think. Buy these micro caps, the 5 in particular that are getting onto the Russell, the 6th one. If you want to buy Radcom, buy Radcom. I think it might sneak on. It's hard to know. There's 2 weeks left. And then Katera. Katera is the one that you need to find a way into. That is going to be maybe the best natural gas play in America, because when they sell their Permian resources, their Permian assets, I mean, it's just an incredible company with a balance sheet. I mean, their balance sheets would just be so good, and then they have all that Marcellus acreage. I think they'd probably be the best positioned natural gas play. I really do. I think that they'd be a powerhouse. And I don't know how the acreage lays out in Pennsylvania, so maybe they do a merger after that too. But you're just going to keep seeing more and more mergers in oil and gas. We're going to be down. The number that the private equity guys said is expect under 20 companies to control all the oil and gas in America in the next 3 to 5 years. That's what they said. 3, 4. I think they said 5 to 7 years actually. The number of companies, and I have one of the charts somewhere. I'll put it in an article. The number of oil and gas companies, when you include the wildcatters and the ranchers, there was like 8,700 of them 20 years ago. And now they're down to like 2,800. I mean, they're going away. I mean, it's just all getting put together. And yeah, you're going to have a couple dozen companies controlling all the oil and gas in America soon. All right. Have a good day. I have a phone call to take. And then, yeah. But, as acrimonious as this election is becoming, if you compare the two guys on economic, it is clear who is who. If you compare them on social policy, it is clear who is who. If you think that border policy is the number one most important issue, realize that there's no, neither one has been any better than the other. Biden's actually deported more people than anybody in history. So, I hear people talking about some of these issues, and I'm like, yeah, well, learn the facts before you have an opinion. They've both been bad on immigration, and it's because nobody will stand up to the special interests. And ultimately, Russ Feingold and John McCain were right about that. The special interests are so strong in this country that we're just really never going to get the government that we want until somehow the special interests are controlled. And I don't know the answer on how to do it, right? Money begets power, power begets money, money begets power. It's just a cycle, and it's a very hard cycle to break. So we'll see. We will see what happens. I just don't think it's going to make a ton of difference on the nature of how energy is developing, because the money's already just, it's that easy. And these companies are not going to allow themselves to be bankrupted. Even Exxon doesn't want to see this stuff undone, right? Occidental doesn't want to see this stuff undone. Why? Because they get all these tax credits. They're not going to undo it. All right. Have a good afternoon.